This is Trade Alive with IUX, where markets come alive and trading gets real. Let's go live.
This podcast is brought to you by IUX Trading Platform, elevating your trading experience.
The year was 1990. The scorching heat of the Middle Eastern desert was about to ignite a fire that would burn through the global financial system. Saddam Hussein's military forces had just crossed the border, invading Kuwait. Within hours, the world was standing on the absolute edge of a massive geopolitical conflict, what we now know as the Gulf War. On Wall Street, the reaction was instantaneous, and it was pure, unadulterated panic. Oil prices began to skyrocket uncontrollably as fears of a massive supply shortage gripped the globe. The stock market, paralyzed by uncertainty, went into a terrifying freefall. Portfolio managers were scrambling, desperately trying to liquidate their positions to protect whatever capital they had left. Fear was the only currency that mattered that day. But far away from the screaming crowds on the trading floors, behind the closed doors of a newly established hedge fund, one man was not panicking. In fact, he was entirely calm. While the rest of the world saw chaos, he saw a grand, predictable chessboard. He didn't just survive this disaster, he had anticipated it. He had strategically positioned his capital for exactly this moment. By the time the dust settled at the end of that incredibly volatile year, the average investor had suffered devastating losses. But this man's fund? It closed the year with a mind-blowing, almost impossible return of 86%. While traditional investors are terrified of global crises, this man built his entire empire on them. He is considered one of the founding fathers of global macro trading. A global macro trader doesn't just look at a company's earnings report or a simple stock chart, they look at the entire planet. They analyze interest rates in Japan, political elections in Europe, and military movements in the Middle East. They connect the invisible dots that move the global economy. But what truly separates this man from the rest of Wall Street isn't just his intellect, it is his absolute, uncompromising, and ruthless approach to risk management. He possesses a level of discipline so strict that it's kept his capital safe through every major financial disaster of the modern era, from Black Monday in 1987 to the dot-com crash to the 2008 financial crisis. His name is Louis Bacon. Unlike many public billionaires, he is a phantom. He rarely gives interviews, he avoids the spotlight. He prefers the silence of nature over the noise of the city. Yet his empire, Moore Capital Management, remains one of the most legendary financial institutions in history. His story is not a fairy tale of blind optimism. It is a masterclass in survival. It is about how to read the shifting winds of the global economy, how to anticipate the fall, and above all, how to protect your downside at all costs. Welcome to Trader's Journey, a part of Trade Alive, brought to you by IUX Education. In this episode, we are going to trace the extraordinary path of a man who started at the very bottom, working as a runner in the brutal cotton pits of New York, and rose to become a billionaire architect of risk. This is The Visionary of Risk, how Louis Bacon turned global disasters into a billion-dollar empire. Let's begin the journey. If you truly want to understand how a macro trader like Louis Bacon operates, you cannot just look at his financial models. You have to look at where he came from. Louis Bacon was born in 1956 in Raleigh, North Carolina. Unlike many Wall Street legends who spent their childhoods locked in rooms staring at mathematics textbooks or early computer screens, Louis was an outdoorsman. He spent his youth in the woods and on the water. He was an incredibly passionate hunter and fisherman. Now, this might sound like just a weekend hobby, but in reality, it was the foundational training for his entire trading psychology. Think deeply about the mindset of a master hunter. A hunter does not run wildly through the forest making noise. A hunter possesses absolute, unbreakable patience. They will sit in the freezing cold or the blistering heat for hours, perfectly still, observing the subtle changes in the wind, the rustle of the leaves, and the behavior of the environment. They wait until the conditions are absolutely perfect, and the moment the target appears, they do not hesitate. They execute their plan with deadly precision. Lewis took this exact hunter instinct and mapped it directly onto the global financial markets. He learned to observe the global ecosystem, wait patiently in the shadows, and strike only when the macroeconomic conditions aligned perfectly. Interestingly, his academic path was not a straight line to the financial district. He didn't initially study economics or finance. He actually attended Middlebury College and earned a bachelor's degree in American literature. While it might seem strange for a future billionaire trader to study literature, it gave him a unique advantage. Literature teaches you how to read human narratives, understand character flaws, and analyze human psychology. And what is the stock market if not a massive collection of human emotions driven by fear and greed? Eventually, his fascination with the mechanics of the market led him to pursue an MBA at Columbia Business School. But even with a prestigious Ivy League degree in his hand, Lewis did not start his career at the top of an investment bank. He started at the absolute gritty bottom. In the early 1980s, he got a job on the floor of the New York Cotton Exchange. He started as a runner and a clerk. If you have never seen a commodities trading pit from the 1980s, you have to erase the image of modern, quiet computer screens from your mind. Imagine a physical arena. Imagine hundreds of men crammed into a tiny, suffocating space, screaming at the top of their lungs, waving paper tickets, and aggressively fighting each other to execute orders. It was chaotic, it was loud, it was physically exhausting and completely unforgiving. It was here, in this brutal environment, that Lewis crossed paths with another legendary figure, Paul Tudor Jones. He was already a rising star in the cotton markets, and Lewis began working for him, absorbing everything he could. Working alongside Paul Tudor Jones taught Lewis a critical lesson about extreme risk management and how to ride massive macroeconomic trends. The trading pit taught young Lewis a lesson that no textbook at Columbia University ever could. The financial market is not a neat mathematical equation. It's a living, breathing, and ruthless jungle. If you show hesitation in the pit, you get run over. If you let your emotions override your discipline, the market will devour your capital in seconds. It was in this chaotic environment that Lewis learned to respect the market. He learned to manage his fear. He realized that to survive in this jungle, he had to become the ultimate apex predator, always alert, always defensive, and always ready to protect himself before trying to conquer the world. But the transition from a pit clerk to a financial mastermind was not a smooth, uninterrupted rise to the top. Louis Bacon was not a flawless genius from day one. He had to bleed first. In his early years of trading and managing smaller accounts, he made painful mistakes. He misjudged market movements, underestimated volatility, and suffered heavy losses. For a proud young man, taking a massive financial hit can be devastating. Many traders let their ego take over in these moments. They get angry at the market, they refuse to admit they are wrong, and they eventually lose everything. But Louis took a different path. He embraced the pain of those early losses. He internalized them. Those defeats taught him the most valuable emotion a trader can possess: fear. He realized that to survive long-term, he could not afford to be blindly optimistic. He had to be defensive. He started to look at every single trade by asking, how much money can I make, but by asking, how much capital will I lose if I'm completely wrong? This paranoid, hyper-defensive mindset became the core of his financial DNA. And it was exactly this paranoid mindset that saved his life in the late 1980s. To understand the magnitude of what happened next, you have to understand the atmosphere of Wall Street in 1987. It was an era of extreme financial euphoria. The stock market was in the middle of a historic bull run. Everyone was making money. The general consensus across the globe was that the market was invincible and would simply keep going up forever. Greed was celebrated. But Louis Bacon, acting like a seasoned hunter, did not join the celebration. He stood at the edge of the forest and sensed a dangerous change in the wind. He ignored the noise and focused purely on the macroeconomic data. He saw inflation creeping up. He watched the US dollar weakening significantly. He noticed that interest rates were climbing, making borrowing more expensive. And, most importantly, he saw that the stock market was extremely overvalued compared to historical norms. The global economy was resting on a very fragile foundation. While the rest of the world was aggressively buying, Louis Bacon's internal alarm bells were screaming. He anticipated that a massive correction was imminent, so he executed his strategy. He didn't just quietly sell his stocks, he actively positioned his portfolio to profit from a severe market crash. He built a massive, unbreakable defensive fortress around his capital, and then reality caught up with the market. October 19, 1987 arrived. It is a date forever burned into the history books as Black Monday. Out of nowhere, a wave of unprecedented panic swept across the globe. Computer systems froze, the Dow Jones Industrial Average plummeted by an astonishing 22.6% in a single trading session. It remains the largest one-day percentage drop in history. It was absolute carnage. Trillions of dollars vanished into thin air in a matter of hours. Men who thought they were masters of the universe were weeping on the floor of the exchange. But where was Louis Bacon amid all this destruction? He was completely unscathed. Because he had anticipated the fall and positioned himself defensively weeks in advance, he didn't just survive Black Monday, he generated massive returns. This moment was his awakening. It proved to him and to the world that his hunter's instinct combined with deep macroeconomic analysis actually worked. He wasn't just a survivor anymore. He had evolved into a visionary who could see through the chaos. After successfully navigating the devastation of Black Monday, Louis Bacon knew he possessed an edge that very few in the industry had. He was finally ready for the big leagues. He received an inheritance of roughly $25,000 from his family. Now, it is important to clarify something here. You do not simply open a multi-billion-dollar global hedge fund with $25,000. Instead, Louis used this small capital as his first bullet. It was his proving ground. He traded this money meticulously to build a flawless, undeniable track record. He needed to prove to the financial world that his 1987 survival was not a stroke of luck, but the result of a highly replicable, disciplined system. His consistent, calculated returns spoke for themselves. Once he had the hard data to back up his philosophy, he successfully raised substantial capital from family members, close associates, and eventually powerful external investors. With this solid foundation, in 1989, he officially launched his hedge fund, More Capital Management. And he did not have to wait long for the world to test his new minted fund. In 1990, a massive geopolitical crisis exploded on the global stage. Saddam Hussein's Iraqi military forces invaded neighboring Kuwait. The Middle East was thrust into extreme turmoil, and the world found itself on the absolute brink of the Gulf War. Louis Bacon's macroeconomic radar was fully engaged. He had been monitoring the escalating tensions and anticipated the invasion before the first tanks even crossed the border. He knew exactly how the financial ecosystem would react to a war in the Middle East. It was classic first-order thinking. War threatens the global energy supply. Therefore, oil prices will skyrocket, and the stock market, paralyzed by uncertainty, will crash. Louis executed phase 1 of his strategy. He aggressively allocated capital to buy oil contracts, and he heavily shorted the equities market, positioning his portfolio to profit from the downward spiral. He was exactly right. Oil surged, stocks plummeted, and more capital generated massive early profits. But here is where Louis Bacon separates himself from ordinary traders. This is the ultimate masterstroke that cemented his legacy. While the masses and traditional fund managers were terrified, believing that the war would drag on for years and trigger a deep global recession, Louis was engaging in second-order thinking. He analyzed the military capabilities of the nations involved. He anticipated that the United States-led coalition would heavily intervene, and when they did, they would overwhelm the Iraqi forces in a matter of days or weeks, not years. He realized that the fear in the stock market was severely overpriced. He didn't just predict the news, he predicted the market's reaction to the news. The moment the United States military initiated Operation Desert Storm, Louis did the unthinkable. In a split second, requiring nerves of absolute steel, he completely reversed his entire portfolio. He liquidated his massive oil positions at the absolute peak of the panic. Simultaneously, while there was still metaphorical blood in the streets, he aggressively bought into the heavily discounted stock market at the absolute bottom. His macroeconomic thesis was flawless. The U.S. military dominated the conflict rapidly. The global panic evaporated overnight. Oil prices collapsed back down, and the stock market experienced a violent, explosive rally upward. By strategically capturing the profits on the way down, and then capturing the explosive recovery on the way up, the results were historic. In 1990, a year when most traditional funds were suffering devastating losses, more capital posted an astonishing, industry-shaking return of 86%. That single brilliant sequence of trades elevated Louis Bacon into the realm of financial royalty. His fund rapidly grew into a multi-billion-dollar empire, proving that the ultimate way to build wealth is to master the chaos of the global chessboard. So, how do you replicate a mind like this? How does a man who started at the bottom of a chaotic trading pit rise to build a multi-billion-dollar empire, surviving decades of financial destruction? Before we can extract his specific trading rules, we have to fundamentally understand his psychology. The general public often assumes that to make billions in the financial markets, you have to be recklessly brave. They think you have to be fearless. But Louis Bacon was the exact opposite. His ultimate superpower was, in fact, fear. He was constructively paranoid. He was constantly looking over his shoulder, expecting the market to attack his portfolio. He never assumed he was safe. In his mind, the primary goal of trading was never about making the maximum amount of money. It was always about protecting the capital he already had. He played intense defense before he ever thought about playing offense. From this highly defensive, paranoid mindset, we can extract 3 absolute master-level lessons that every investor must learn from the visionary of risk. Lesson number 1, mastering the global chessboard. Most amateur traders look at a single stock or a single chart in isolation. Louis Bacon looked at the entire planet. He connected the invisible dots between international politics, regional wars, currency fluctuations, and central bank policies. But his ultimate secret, the reason he outperformed everyone else, is a concept called second-order thinking. He did not just predict the news, he predicted how the human herd would react to the news. Anyone can look at a geopolitical conflict and say, the market will panic. That is first-order thinking. Louis Bacon would ask the next, far more profitable question. Once the market panics and prices collapse to irrational lows, what will trigger the inevitable recovery, and how do I position myself for it? Application for you. Stop looking at financial news in a vacuum. When a major global event occurs, don't just react to the headline. Anticipate the overreaction of the crowd. Wait for the panic to exhaust itself, because that's exactly where the greatest, most asymmetric opportunities lie. Lesson number 2. The hunter's patience. Remember his background. As a master hunter, Louis Bacon knew that you don't shoot at every single shadow that moves in the forest. You wait. You conserve your energy. In trading, this translates to extreme discipline. Louis would often wait patiently for the macroeconomic fundamentals to align perfectly with the technical price action on the charts. If his macroeconomic research told him to buy, but the technical chart was breaking down, he would do absolutely nothing. He refused to force a trade. Application for you. You must realize that sitting in cash is a highly strategic position. You don't always have to be active in the market. Have the discipline to sit on your hands. Wait until your fundamental thesis and your technical entry points are in perfect harmony. And when the target is clear, execute without a single drop of hesitation. Lesson number 3. Ruthless risk management. This is the absolute core of Louis Bacon's philosophy, and it's the hardest rule for humans to follow. He operates on a brilliantly simple yet brutal mandate of, if it goes down, you sell it. He doesn't believe in averaging down on a losing position. He doesn't believe in holding on to a depreciating asset and hoping it magically recovers. Hope is not an investment strategy. If a trade goes against his initial thesis, he cuts it immediately. Why is this so hard for ordinary investors? Because cutting a loss means admitting you were wrong. It damages the human ego. Louis Bacon survived because he completely separated his self-worth from his trading results. A loss is just a business expense, not a personal failure. Application for you. You must establish a strict, uncompromising stop loss for every single trade. Never hold on to a depreciating asset because your ego refuses to accept a loss. You can always re-enter the market tomorrow with a clear head, but if you allow a small loss to destroy your entire capital, your journey is permanently over. After decades of conquering the global markets, navigating historic crashes, and building a multi-billion-dollar empire, Louis Bacon did something that very few Wall Street legends ever have the courage to do. He walked away. In 2019, he made an announcement that sent shockwaves through the financial industry. He decided to step down from managing outside capital. He returned billions of dollars to his investors. People asked why. Did he lose his edge? Was he defeated by modern algorithmic trading? Absolutely not. He did it because after years of surviving the intense, crushing pressure of the global markets, he realized something profound. He realized that the ultimate prize in life is not simply accumulating more numbers on a computer screen. The ultimate prize is true, absolute freedom. To truly understand his exit, we have to look back at the beginning of our story. We have to look at the young boy from North Carolina who loved the outdoors. Louis Bacon took a significant portion of the massive wealth he extracted from Wall Street and did something extraordinary. He didn't just buy luxury yachts or skyscrapers. He bought entire mountains, islands, and pristine landscapes across the globe. And he didn't buy them to build resorts or real estate developments. He bought them to protect them. He became one of the world's most prominent conservationists. The apex predator of Wall Street jungle used his ultimate winnings to permanently preserve the real wilderness that he loved. This is perhaps his greatest lesson in risk management. Louis Bacon proved that you must protect your financial capital today so that tomorrow your capital can protect your freedom. He showed the world that if you master your fear, if you embrace second-order thinking, and if you execute your strategy with iron discipline, you can conquer the financial markets and then walk away on your exact own terms. Before we wrap up this incredible journey, I want to pose a serious question to you. Have you ever held on to a losing position just because your ego refused to accept defeat? If you had applied Louis Bacon's uncompromising rule, if it goes down, you sell it, how would your trading account look today? We want to hear your stories. Drop your experiences in the comments below, and let's learn from each other's battles in the market. And remember, if you want to dive deeper into the precise mechanics of professional risk management, or if you want to master the art of global macro trading, your next step is waiting for you at the IUX website. We have built a massive library of premium educational content, articles, and strategies designed specifically to elevate your skills and protect your capital. Thank you for joining us on this masterclass across the global chessboard. This has been Trader's Journey, a part of Trade Alive, brought to you by IUX Education. Remember, the market owes you nothing, and your discipline is your only shield. Until next time, stay defensive, stay disciplined, and goodbye.
You've been listening to Trade Alive with IUX. Ready to put these insights into action? IUX is here to power your next winning trade.